Nvidia's fourth quarter of fiscal year 2025, ending January 26, 2025, demonstrated exceptional performance, with record-breaking results driven primarily by robust demand in its data center segment. Key financial highlights. Revenue. Nvidia reported a record $39.3 billion in revenue for Q4 FY25, a significant 12% increase sequentially and a remarkable 78% jump year-over-year. For the full fiscal year 2025, revenue reached $130.5 billion, a substantial 114% growth from the prior year. Data center revenue. This segment was the powerhouse, generating $35.6 billion in Q4 FY25, up 16% sequentially and 93% year-over-year. Full-year data center revenue more than doubled to $115.2 billion. Blackwell ramp. The new Blackwell platform saw an unprecedented and rapid ramp exceeding expectations. $11 billion of Blackwell revenue was delivered in Q4, marking the fastest product launch in the company's history. Gross margin. GAAP gross margin was 73%, and non-GAAP gross margin was 73.5%. This saw a sequential decrease as expected due to the initial deliveries of the more complex Blackwell architecture. Management anticipates gross margins to be in the low 70s during the Blackwell ramp, with a return to the mid-70s by the end of the fiscal year as manufacturing costs are optimized. Shareholder returns. Nvidia returned $8.1 billion to shareholders in Q4 FY25 through share repurchases and dividends. Management's forecast for future quarters. Q1 FY26 outlook. Total revenue is projected to be $43 billion, plus or minus 2%. This forecast includes a significant ramp of Blackwell and sequential growth in both data center and gaming segments. Gross margins. Q1 FY26 expected to be 70.6% GAAP and 71% non-GAAP, plus or minus 50 basis points. Operating expenses. FY26 projected to grow in the mid-30s% range. Significant risk factors. Export controls. China shipments remain well below pre-export control levels and are expected to stay at that percentage absent regulatory changes. The market in China remains competitive. Supply chain complexity. The ramp of the Blackwell platform, with its intricate design and numerous components, presents significant manufacturing and supply chain challenges. Gross margin improvement. Achieving the projected return to mid-70s gross margins relies on optimizing manufacturing costs for the complex Blackwell systems. Tariffs. Potential future tariffs on semiconductors represent an unknown factor impacting the broader semiconductor industry. Highlights. Blackwell's unprecedented ramp. The speed and scale of the Blackwell product introduction and ramp are highlighted as a historic achievement, exceeding internal expectations. Accelerating inference demand. Demand for inference is accelerating, driven by new reasoning models and techniques like fine-tuning, reinforcement learning, and distillation, which require significantly more compute than pre-training. Blackwell is specifically architected to supercharge reasoning AI inference. Full-stack AI platform. Nvidia's end-to-end AI platform, from compute and networking to software and optimized libraries like TensorRT, is crucial for customers to achieve performance gains and cost reductions. Strong CSP partnerships. Large cloud service providers, CSPs, like Azure, GCP, AWS, and OCI are early adopters of Blackwell, forming the backbone of AI factory build-outs. Gaming and professional visualization growth. The gaming segment, despite Q4 supply constraints, is expected to see strong sequential growth in Q1 with increased supply. Professional visualization also saw growth driven by automotive and healthcare. Automotive segment expansion. The automotive vertical is experiencing rapid growth, with revenue expected to reach approximately $5 billion in FY26, driven by advancements in autonomous vehicles and robotics. New product introductions. The announcement of GeForce RTX 50 series GPUs and Blackwell laptop GPUs for gaming, and the upcoming Blackwell Ultra and Vera Rubin platforms, underscore Nvidia's continuous innovation. The three scaling laws of AI. Jensen Huang elaborated on three key drivers of AI computing demand: pre-training, post-training, fine-tuning, distillation, and test-time compute/reasoning, with reasoning models demanding significantly more computation. Lowlights. Sequential decline in gaming revenue. Gaming revenues saw a 22% sequential decrease in Q4, largely attributed to supply constraints during the holiday season. Networking revenue decline. Networking revenue experienced a 3% sequential decline, though it is expected to return to growth in Q1 FY26. Initial gross margin compression. The initial ramp of Blackwell led to a sequential decrease in gross margins, as expected, due to manufacturing complexity. Most important statements from management. Jensen Huang, President and CEO, on Blackwell's ramp. This is the fastest product ramp in our company's history, unprecedented in its speed and scale. Blackwell production is in full gear across multiple configurations, and we are increasing supply quickly, expanding customer adoption. On the future of AI compute. We now have three scaling laws, as I mentioned earlier, driving the demand for AI computing. The traditional scaling laws of AI remain intact, but it's no longer enough. We have two additional scaling dimensions. Post-training scaling, where reinforcement learning, fine-tuning, model distillation require orders of magnitude more compute than pre-training alone. Inference time scaling and reasoning, where a single query can demand 100 times more compute. On reasoning AI. We designed Blackwell for this moment. A single platform that can easily transition from pre-training, post-training, and test-time scaling. Blackwell's MP4 Transformer Engine and NVLink 72 scale-up fabric and new software technologies let Blackwell process reasoning AI models 25 times faster than Hopper. On the broader AI market. I do believe that we're at the beginning of this new transition, and no technology has ever had the opportunity to address a larger part of the world's GDP than AI. On future products. Come to GTC, and I'll hold on to you about Blackwell Ultra, Vera Rubin, and then show you what's the one click after that. Really exciting new product. Colette Kress, Executive Vice President and CFO, on Q4 performance. Q4 was another record quarter. Revenue of $39.3 billion was up 12% sequentially, and up 78% year-on-year, and above our outlook of $37.5 billion. On gross margin expectations. During our Blackwell ramp, our gross margins will be in the low 70s. We expect to probably be in the mid-70s later this year. On Q1 FY26 outlook. Total revenue is expected to be $43 billion, plus or minus 2%. Continuing with its strong demand, we expect a significant ramp of Blackwell in Q1. We expect sequential growth in both data center and gaming. On gross margin complexity and opportunities. Our gross margins are quite complex in terms of the material and everything that we put together in a Blackwell system. There is a tremendous amount of opportunity to look at a lot of different pieces of that, and how we can better improve our gross margins over time. In summary, Nvidia delivered a stellar quarter driven by the explosive growth of AI demand and the successful launch of its Blackwell platform. The company is positioned for continued strong growth, with a clear roadmap of innovation and an expanding addressable market in AI.